Hi, everybody, and thank you for joining the Florida Broker Roundtable. Today, I would like to thank Robert Milligan, our Florida Robert Broker, and our special guest, Bruce Latimer of xQuote Insurance. Before we begin, I would like to tell you of a couple things that we are very excited about here at AJI. First is our nationwide coaching program. This is a program that will cater to new and experienced agents alike. Other highlights are Real Estate Tools and Technology Tuesday and Fun Facts Friday, which will feature anything related to AJI University and the tools that AJI has to offer. Both are live on Facebook. Please don't hesitate to book a one-on-one call with me for all questions concerning our systems here at AJI, or if you just need a refresher course on AJI University, you can reach me by email at support@ajicorporate.com. So without further ado, I'm going to welcome Bruce and Robert. Thank you very much.
Well, thank you.
Thank you.
Thank you for that warm welcome. And I'll just say a couple things to give a little background to what's going on and how we're fortunate to have Bruce with us today, not only on this call, but as our insurance liaison and partner here in the state of Florida. And it's funny how Bruce came to me. It was through my father's own real estate activity, buying and selling property, that my dad likes to really shop insurance and find quality people to work with and partner up with. And my dad has really high standards, and he got frustrated with a lot of people that he tried working with. And eventually he connected with Bruce, and Bruce was always extremely responsive and always had great coverage, great values. And that was probably about 3-4 years ago, I'm guessing now. And fortunately, I decided to offer this insurance service to our agents and beyond here in the state of Florida. And Bruce was in a really great time and place to join our team. And we have Bruce now with us at xQuote Insurance, and got a bunch of great carriers and great value and lots of great business going on. So we're thrilled to have you here, Bruce. Welcome.
Couldn't be happier. Could not be happier with everything that's going on right now.
Well, that's awesome. And,
Awesome.
I'm excited because we're going to have a lot of really great info for our realtors. And, even with the little bit of experience I have in real estate, insurance is something that I've come to learn. It changes from month to month because, the risk landscape changes constantly. Whether or not we've had storms recently affects the insurance market. There's a lot of variables where, in real estate, things kind of stay consistent for a while, whereas insurance, changes more often. So I've learned an awful lot from you, Bruce, and
Correct.
looking forward to getting into
Awesome.
some of that stuff.
Yeah,
Yeah.
insurance is it's definitely a never-ending it's a never-ending learning experience, because things can change rapidly.
They certainly can.
So,
And, one thing
yeah.
that's been in the news recently that affects us significantly in Florida is the flood insurance overhaul situation that the House just voted on. And, it's not an insignificant amount of money. I think they approved like another 25 or 30 billion dollars. And, maybe you can start there and tell us I mean, nobody knows for sure what's going to happen, but what is your guesstimate of what that's looking like and how it affects the flood insurance market?
Well, it's the way it's going to affect the flood insurance market could be from a pricing standpoint, because obviously with the claims that have happened with Irma and Harvey, there is a big deficit in the National Flood Insurance Program right now, and the government did afford another 25, 30 billion. But I expect that what we will see, we'll always have the opportunity to purchase flood insurance. That will never change.
Mm-hmm.
But I expect that in the year 2018, next year, we're going to start seeing some rate increases. I don't know, as far as from county to county, what the percentage of increase will be. But we're more than likely going to see a rate increase, which happens. I mean, which normally happens when there's such a big deficit, and we've had so many storms come through. They've unfortunately got to recoup some of that money, and the way they do it is through a rate increase.
Right.
So, we'll still have you'll still be able to purchase your preferred risk policies, which would be a policy where you are not in a flood zone, like you could be in flood zone X, B, or flood zone C, where they're not really considered in the 5-year floodplain. So, that still should be around a $450, $500 per year policy. I would expect there to be an increase in that, but they will still be offered. And of course, you'll still have your standard flood insurance. But I definitely do anticipate there's going to be some rate increases, without a doubt.
Yeah, that's good. That's good info, and something that is, and I speak on these webinars as if some of the agents listening in are newer to the industry. And, flood insurance and regular insurance is something that's part of the affordability whenever a lender is qualifying a buyer for their debt to income ratio, and that is considered part of their payment that's escrowed in. So, if somebody doesn't have a lot of money to put down and is kind of, just squeaking in under the wire of what's affordable to them based on their debt to income ratio, it's important to look and see whether a property is in a flood zone, because that could take them outside of the allowable lending limit. So, and that info is very easily attainable in the tax record. So that's definitely something to think about.
That's absolutely correct. And as we know, anytime there's a mortgage involved, it is a mandatory. It's a mandatory purchase if they're in a flood zone.
Right. Absolutely. So, and something that we could maybe talk about that I think realtors would find interesting too is if there is a borrower that's really challenged to do everything they can to qualify. What are some ways maybe that that borrowers and buyers, homeowners in general, can get discounts or credits so that they can make their insurance a little bit more affordable?
The biggest credits on a homeowner's policy are always going to fall under the wind mitigation credits.
Okay.
So in other words, the roof. As most people know, one of the big stipulations when it comes to homeowners insurance in Florida, one of the first questions that's always asked is, how old is the roof? Okay. Most insurance companies will prefer that if it's a shingled roof, it's not more than 15 years old. Okay, if we have a shingled roof that's 15 years or older, the majority of insurance companies will not write the policy. There are a handful of insurance companies that will, provided there is a roof certification inspection completed that states there is at least 5 years of remaining roof life. Okay, so we'll take Florida. We'll take Federated National for example. Federated National is one of your better companies in Florida. They've been in Florida for the longest. They've been here in 1994. Since 1994, they have gone through quite a few major hurricanes, Andrew included, and they're still standing strong and even stronger. Federated National is one of those companies that if the roof was 30 years old, as long as there was a roof certification completed on that said there was at least 5 years of life left, you'd be eligible for Federated National.
Okay.
Other companies will not allow that, 15 years or older for shingle roofs.
And that certification, does that add a significant cost to the policy, even though it's certified?
No, it's a $65 out-of-pocket expense for the customer to have that inspection completed.
Wow.
So I've had to have customers do that on many different occasions.
That's interesting. That's a good option to know about.
One of the things I like to tell new customers or even new realtors as we go forward and I meet them is, if you have a buyer that's interested in a home, let's say that it was built in the 90s. Okay. If there has been an update on that roof after the year 2002, chances are there's going to be a lot of good mitigation credits up there. So when going through inspections or ordering inspections, and I know a lot of times it's title companies that have to do these, but you should always try to get a wind mitigation inspection ordered because that could seriously benefit the buyer as far as homeowners insurance is concerned. I've seen homeowners premiums as much as $4,000 or $5,000, but with a favorable wind mitigation, they're cut in half. So now that $5,000 premium with the favorable mitigation inspection becomes $2,500.
Wow, that's not insignificant.
It's not. No, it's not. It's definitely not. The wind mitigation inspections are very, very vital in saving money for the customers.
Are there, and so obviously wind mitigation's the big one. Are there any other, smaller things that could add credits to help get the cost a little bit more affordable?
Gated communities.
Okay.
There's always a little discount for gated communities or the communities that have that are guarded 24 hours. And then of course you have your standard central, monitored burglar fire alarms.
Okay.
Those are really the main ones. The main one is the one where you're going to see the most significant savings is in the wind mitigation inspections.
Okay. Well, that is definitely. That is definitely.
Keep in mind too, we've been talking about the shingle roofs. If you have a concrete tile roof, insurance companies will give you up to 30 years on the concrete tile roof. So without having to worry about not being able to place insurance. If you have a concrete tile roof and and it's 29 years old, you're still going to be able to get an insurance policy wherever you want to.
Okay, yeah, that's good to know. Now, in other, in the wind mitigation is mostly that's mostly relating to hurricane and wind coverage. That doesn't really have anything to do with dwelling coverage. Is that correct?
That's correct.
Okay.
Yeah.
And so, in hurricane and wind coverage, being separate from dwelling, which this gets confusing, especially newer realtors that that this is all all kind of new to them now, all these housing related issues. So is hurricane and wind something that is always on a policy, or is that something that needs to be specifically added, or do all lenders require hurricane and wind, or how does that work?
All lenders will always require hurricane and wind in the state of Florida.
Okay.
With no ifs, ands, or buts. Now, that being said, if you purchase a home and you purchase it as a cash deal, there's no mortgage involved. You can exclude hurricane and wind coverage, and your premium would be about $500 a year.
Wow. Yeah.
It's taken a big risk, but if there's a home that's owned outright with no mortgage, you have that option to not purchase hurricane or wind coverage.
That's really interesting. And something else that I think a lot of realtors may get hung up on a little is that they confuse that that flood insurance is pretty much one and the same as like water damage, like a water damage claim, and that's something totally separate, right?
That is something completely separate. Flood insurance is defined as an overflow, a seepage, which affects two adjacent properties as well as yours. So if you live in a tidal area, if you live in a lake, okay, and hurricane comes along, the lake rises, continues to rise, seeps into the neighborhood, gets into people's houses. That's what is considered flood insurance. Okay. A homeowner's policy specifically excludes flood insurance.
Hmm.
Okay. So when we talk about water damage coverage, which is provided under a homeowner's policy, what that coverage means is, let's say wife and you are out working, you come home, you're greeted by 2 inches of water sitting in your living room floor because one of the pipes burst in your wall.
Mm-hmm.
That's water damage coverage.
Hmm.
Okay, so in other words, the homeowner's policy will pay for it. Or your dishwasher, your garbage disposal, the hot water heater, something in the house, water related, leaked or burst, causing damage to your flooring, your walls, your furniture, whatever the case may be. Okay, that is where the homeowner's policy comes into play. And that's where your water damage coverage comes into play.
Okay, that makes
Has
sense.
nothing to do with the flood.
Right, that's easy for a lot of people to get confused on, that unless you specifically choose to insure, your home for flood, if because sometimes even just with a heavy rain, you can have water that, seeps in from like under a sliding glass door or something, and that is not going to be covered under water damage, correct?
That will not be covered under water damage, and the chances are it's probably not going to be covered. Well, back up, because if there is an issue where we have damage caused by wind-driven rain,
Mm-hmm.
that is something that a homeowner's policy would cover.
Okay.
Okay. So let's take that scenario. Let's say there's a storm outside. Lightning hits a tree. The tree snaps. The branch breaks through the window.
Mm-hmm.
The rain pours in through the window as well.
Mm-hmm.
Okay, so you actually have a couple scenarios. You got the lightning, which is covered, the window, which is covered, and then the damage because of the rain coming in that does to your house is covered under the homeowner's policy.
That's interesting. I tried to throw a curveball and you handled it brilliantly. So good on you. So water damage and flood, two very, very different things. And I personally recommend, and maybe you could know about how much it is, but if a home is not in a flood zone, it's actually not very expensive to have flood coverage added. Is that correct?
No, it's not. It's not at all. It's actually right now in Zone X, Zone B, as in boy, Zone C, as in Charlie, are not considered flood zones.
Mm-hmm.
The flood zone, they determine a flood zone is how many years is it likely going to flood in. So they have a 500-year flood plan, and then I think a 100-year flood plan.
Right.
So the ones that are in the 100-year flood plan are going to be your zones X. You're going to be your zones A, E, V, with this new stuff. So they're the ones that are likely to flood every 100 years.
Mm-hmm.
So I just went off on a tangent there for a minute.
No, that's good. And what I'm thinking that realtors would also be interested to know about, because so aside from flood, the things that the policy that your lender requires is going to require hurricane and wind. It's going to have dwelling coverage. It's also going to have personal contents and liability coverage. And maybe, and I'm curious, I've never asked you this, we've never spoken about this, but in terms of, like your personal contents, maybe we could focus on that for a second, what all that covers and the limitations. But also I'm curious, as I just sit here and think, what if while a property is being shown, we've listed a house that's for sale, and what if jewelry is stolen from the house or something along those lines? What kind of, is there any coverage for that? Or I'm just curious what your thoughts are on personal contents and in general.
Personal contents are anything that you own that's not permanently fixed it's not a permanent part of your structure. So personal contents, all of your furniture, your clothing, your dishware, your chairs, your outside patio sets, your bicycles, fishing poles, computers, TVs, jewelry is considered or is considered contents.
Mm-hmm.
A homeowner's policy will give you up to $2,500 worth of jewelry coverage.
Okay.
Okay, that's it.
Mm-hmm.
So my strong advice to customers when I talk to them, if you have any expensive jewelries, ladies' wedding rings, engagement rings,
Mm-hmm.
nice watches, Rolex watches, anything that has, let's say, more than a $1,500 value,
Mm-hmm.
those items need to be scheduled.
Okay.
Okay. But what I mean by scheduling is you can take that engagement ring with the appraisal, and that engagement ring might be worth $8,000, and the appraisal says it's worth $8,000. You add that onto your homeowner's policy, it's insured up to that value, $8,000. So if it mysteriously disappears, it's lost in the beach, falls off while boating, you're going to get the full replacement value of that wedding ring, $8,000.
Nice.
Without that being scheduled, all you're going to get is the max $2,500 subject to your deductible, which in most cases are anywhere from $1,000 to $2,500 for your deductible. So you're not going to get anything for that wedding ring, for that engagement ring, that, or that family heirloom,
right?
Antique, paintings, guns, musical instruments. All these items, all these type of items can be scheduled for their full value under your homeowner's policy, providing you have a appraisal.
That's interesting. It's something that, that you don't think about unless you, have somebody to give you a little guidance there.
You don't. Yeah, a lot of people don't. I mean, even like I say, you have a $5,000 Rolex watch. Actually, Rolex watch are probably more than that. But if you lose that, you're out $5,000.
Game over.
Game over. They're going to look at that watch. They're going to tear it apart for depreciation. They're going to say, all right, it was worth $5,000 when you bought it, but now it's 10 years later. Okay, so it's worth $2,500. All right, your deductible is $2,500. Okay, sorry, but we're not giving you anything.
Mm-hmm. And
so
then
items.
And the liability coverage, that's going to be if, somebody, and again, we're often dealing with homes that are for sale. That's going to be if somebody's, showing the house and, slips and falls down the stairs, stuff like that.
Correct.
Okay.
Correct. Or someone's in your kitchen. There's a shoe that really shouldn't be there. Your liability falls on something you're negligent in. Okay, so you left the broom on the kitchen floor. Your guest came in and hit the broom, slipped, feet went out underneath them like a cartoon. Bang! You come crashing down on your head. They might try to sue you. So the liability portion of your policy would cover that.
I see. Yeah, and we've had quite a few people shopping for insurance with us recently, and this is also something that I think is interesting. Especially in the home acquisition process when we have customers shopping. You can, if you're more, if you're willing to assume a little bit more risk, and you're, willing to move the needle a little bit on having higher or lower deductibles, you can kind of play with that and decide, how much the premium is going to be and how much risk you're willing to accept, or what are some things that maybe move up and down a little bit to to get different quotes.
There's a few things. Obviously, number one is your deductible. The higher you go with the deductible, ultimately brings down your premium. So if you start out with doing a homeowner's quote and you offer $1,000 deductible, your premium might be $1,000, might be $1,100 for the year. So then if you get another quote and increase that deductible to $2,500, which is really kind of the norm, it's kind of standard deductible now, then your premium would come down probably about $200.
Okay.
So then it would bring you down below $1,000. Of course, if you really wanted to go crazy, you can go up to a $5,000 deductible, and you'll see a significant savings in premium at that point. Another portion of a homeowner's policy where you can save some money, I don't necessarily recommend it, but I know, everybody, each customer is different, but there's on your personal contents. There's a portion on your personal contents called replacement cost. What replacement cost means is simply the insurance company is going to replace like item for like item. So if you have a $1,000 55-inch television, lightning hits it, shorts out your television, you're going to get a $1,000 television back. Okay. A way to save money is you can remove the replacement cost coverage on your contents and simply go with what's called actual cash value. Actual cash value simply means it's the cost of what the item is less depreciation.
Right.
So if you take that $1,000 television, the same scenario, lightning hits it, shorts out. Let's say the TV's 5 years old. They'll give you $500. And then of course, and keep in mind, the deductible always comes into play with everything. There's always your deductible.
Sure.
So,
that's all really good info, and I'd like to leave a little bit of space here. Maybe we'll just talk about like one or two more things, and then if anybody has any questions, we always welcome the opportunity if anybody wants to have some live dialogue, or obviously we're available anytime for a private phone consultation. But one thing that I did, and I am completely 100% biased, so I'll own up to it. But I just obviously had Bruce audit my own policy and just do a consultation to see what kind of coverage I had, and not because of my bias, but Bruce happened to have something that gave me better coverage at a better price, and you're willing to do that at any time for anyone, right, Bruce?
Absolutely.
Yeah, and that can be on your own personal home, that can be on a customer's home, and it's interesting with insurance. You don't have to wait for a policy expiration date or anything in order to switch coverage. You can, as far as I know, Bruce, you can switch coverage any day you decide to. Is that correct?
You can switch coverages at any time. When there's mortgage companies involved, which I have done many times, is I act if there's a customer that wants to switch because the savings is significant to make him switch without reducing anything in his policy, then I act as a liaison between his mortgage company and the customer and get the mortgage company all the new insurance information, cancel out the current policy. The mortgage company pays the new premium, the new policy in his behalf, and then when that money is returned, when that refund is returned, then the customer sends that money back to his escrow account.
Got it.
So there's nothing lost, everything gained.
Yeah, no, that makes good sense. And in my own situation, if I recall, I went from a pretty sizable hurricane deductible that, I really hadn't paid much attention to. I just bought the house and just bought whatever coverage that seemed reasonable, and, didn't really overthink it, because, when you're buying a house, sometimes you have all kinds of other details that are a little bit more pressing, like, when am I going to move, and kids, and all kinds of stuff. But for me, when I went back and had a look, I had like almost a $15,000 hurricane deductible, and Bruce had a policy for me that reduced it to only about a $2,000 hurricane deductible, and it was actually for slightly less than what I was paying prior. So sometimes it pays to just go and check up on that stuff.
It never hurts. And the one thing I'm 30 years plus in doing insurance. Almost 20 years now in Florida. Started back in the early 90s, 91 actually to be exact, in my father's business up here in New Jersey, and then moved to Florida about 20 years ago. The one thing that I have, being around my father during my beginning years, the most important thing the most valued thing that I've taken from insurance is we are a customer service related industry.
Mm-hmm.
In other words, it is incredibly important to me to make sure that I never miss a phone call, that I am there for anything a customer may need, never not return a phone call, and always explain the homeowner's policy to the customer, because a lot of times, like a lot of other agents, they'll slap something in place just to get the customer through a closing. And that's all great. But when a claim comes, it can turn out to be not so great.
Mm-hmm.
So, one of the values that I have in this industry is making sure that that we as insurance agents and xQuotes are always there, no matter when our customers need us, because they rely on us to make sure we're doing the right thing for them, and we want to make sure that we are doing the right thing for them.
That's awesome, and we do greatly appreciate that, and feel very fortunate to be connected to you and working shoulder to shoulder with you and bringing great value and service to our customers here. And so, really appreciate you, man.
Absolutely.
Yeah, so Tracy, I don't know if you're
Yes.
seeing anything on your end. Is there any questions by chance? Or?
I don't have any questions for you right now.
Okay, well that's fine.
Hello, Tracy. How are you?
Doing well, thanks, Bruce.
So, of course, we appreciate the time, and this is recorded. So if you happen to be watching the recorded version of this in the future, Bruce can be reached anytime at 941-479-1709 or bruce@xquoteinsurance.com. xQuote is your best quote, truly. And,
absolutely.
Love a chance to earn your business, and of course, if there's any considerations as it relates to real estate and the transaction, always feel free to reach out to me for help with those kind of issues. And really grateful for our agents, and grateful that you took the time here today to hopefully learn some good information about insurance. That was good stuff, Bruce.
Absolutely.
Hey, Tracy,
Yes.
Are you still there?
I am, sir.
Just to give you a little bit of a little bit of information. I received an email from one of our close realtors Saturday. It was about 7:30. She was in an absolute panic. She just bought a home. She already closed on the home. It was a cash deal. They closed on the home on last Friday. So she had been working with an agent that was recommended from a friend of a friend. Okay.
Right.
So, and I know this person. I know our realtor. So I guess she wasn't getting good service. I guess the agent messed up the address. The agent never got back to her. So she contacted me Saturday night. It was about 7:30 because I was watching the Flyers game with my mom. And I got her policy written for her in about a half an hour.
That's awesome.
Nice.
Written, bound, put her at ease. She was very grateful. She was very thankful. So that's how, just to let you know, going forward, if there's anything that ever creeps up on you or you ever panicked from an insurance standpoint, you always have my email. My email comes right to my phone. I'm always here.
Absolutely.
I won't miss a thing.
And yeah, I know, I'm in California, but I know how important it is as a realtor to have my team and my go-to people. And it's very important to have a team behind you.
I couldn't agree more. I could not agree more.
Good stuff. Well, thank you for having us, Tracy, and we'll let you wrap it up here.
All right, let's wrap this up. I want to thank Robert and Bruce of xQuote and Robert Milligan, of course, of AJI, and he is our Florida broker. So with that being said, again, thank you, gentlemen, and until next month, Robert, I hope you both have a wonderful afternoon.
And you also.
And you do the same, Tracy. Have a wonderful holiday. Happy Thanksgiving.
Oh, that's right. That's right. Happy holiday to both of you.
Thank you.
I can't believe it's here already.
I know. Well, thank you very much, gentlemen.
Bye
All
now.
right.
Okay,
Take care.
bye-bye.
Bye.
Bye.